Espig is the CEO of Nicola Mining, and he's back here on Inside the Boardroom. Now, in our last conversation, we focused on the company's Treasure Mountain Silver Project, newly received exploration permits there, and their plans to drill for the first time in over a decade on Treasure Mountain. Since then, the company has leveraged their position as British Columbia's only third-party precious metals mill to essentially execute on their long-term plans for steady production. We'll discuss this operational shift and more, plus their increased target price by an analyst group called Atrium Research. So, Peter, when we last spoke, you were primarily a mill for hire, doing profit-sharing agreements. Now there's been that transition, as mentioned, to long-term production. What does that shift mean operationally, and how do you change, or how does it change your revenue predictability?
Sure. First of all, thanks for having me, and great question. So, I think there's nothing has changed in our strategy. So, our strategy is to be not, our strategy was never to be a toll miller of bulk samples. Our strategy was to be a partner with gold projects that were going into mining and will continue mining, as well as to develop our own projects. So what we've seen over the past, but just to reiterate, it's been a buildup of over a year. So we really could see this coming, and we had great visibility of projects coming into production, this time last year. So over the past 12 months, we've seen this, and really since mid-June, where we started processing material from Talisker's mine, that we could say, yes, now we've hit this long-term, 8-year plan of steady production where we can ramp up. And remember, one thing about ramping up is you don't want to ramp up, hire a bunch of people, and then lay them off. So we've done this ramp up where we are there now, where we are now producing, 24 hours a day, 7 days a week, however many days in the month. And that's been the goal the whole time, and that's where we are now. So it's a change of the company, but it's not a change of the strategy.
Well, you're positioned as BC's only third-party precious metals mill. What's your pipeline of potential customers looking like, and could you handle larger partnerships if they become available?
As far as where we are today, we have 3 projects. We have Talisker, we have Ocean Park, we have Blue Lagoon, and we also have Dominion, which we own 75% economic interest. So those 3 fill the mill. So the mill is full. But one thing about with production at mines, and there are hiccups along the way. So we do have, for example, between Blue Lagoon and Talisker, those 2 projects fill the mill. But Dominion is, if there's ever a hiccup or anything, we can then substitute that lower production, put it through the mill. We also have another project that we may be announcing very soon in the near future, signing a bulk sample agreement with us. But ultimately, the goal here is to increase our production, because if we can increase our production, we can become, instead of having $100 to $120 million of revenues per annum, we can double or triple that. And then you become a major player.
Well, when it comes to Dominion Creek, you just started mining about 10,000 tons there. As you mentioned, you hold a 75% interest versus profit sharing elsewhere. Can you walk us through the economics? Like, how does owning 75% of a project compare to your typical profit sharing arrangements?
So Dominion was a stranded asset. When I say stranded, they have a known kind of resource of 20,000 tons that grades approximately 1 ounce gold per ton. So it's very, very high grade. But at the same time, it doesn't justify building a mill, because to get a mill permitted and constructed in the province of British Columbia right now, your permitting period will take you a decade, and then plus $100 million plus. So this is not something that smaller companies or junior miners can afford to do. The majors can, but not a lot of the juniors. And so we approached them and said, look, here's what Nicola can do. We we bought in and we own 50% of the project for the first 10,000 tons. So for the first 10,000 tons, our partner gets a 25% or 50% carry of what's going on at Dominion. But remember, our mill gets a 50% profit split. So in essence, we get 75% because, 50 and 50, where we get a total of the 75% economic interest. But after 10,000 tons, it's our project. That's only the first 10,000 tons. So after the first 10,000 ton bulk sample, Nicola Mining owns 100% of the project. And then we'll look at doing an additional bulk sample. We'll look at, exploration. At that point, it becomes 100% of our project. And we will look for other projects as well that we can, that are within 24 months of a bulk sample. And then we'll do the bulk sample. We'll do the investment, just like we did with Dominion, pay for the permitting, production and everything, reimburse us, and then kind of build that platform out so that ultimately we're, conceptually think of it like we're a consolidator of projects.
Well, if we can also step back and talk about your share price performance. For context for our viewers, Nicola's share price recently triggered warrant acceleration after going over 60 cents for 10 consecutive days. So, Peter, what's driving this performance? Obviously, it's strong. And how much additional capital could you raise from warrant exercises?
When we did the private placement, and which was a hard private placement, and I'd like to put an asterisk or emphasize the fact that that was really our first hard private placement in 8 years. So, a lot of junior mining companies are constantly raising hard money, so they'll raise flow through and hard. Flow through for exploration, hard to keep the lights on. And we've been able to use our own cash flow during that whole period to keep the company operating, and because we have several revenue streams. The reason why we did the private placement, which was I guess in March of this year, March or April, and we did it, and what was and this is, I heard from the exchange that it's very seldom that you actually have an accelerated warrant process that occurs prior to the shares becoming free trading. So within the 4 months, we were already above the trigger of those warrants. So if everyone were to exercise the warrants, it would bring in another $800,000. But I think the key takeaway is answering the question, why did the share price go up like that? And, and it's gone up since the warrant acceleration. So, and I've had several shareholders say, I cannot believe this is the first time I've ever seen a warrant acceleration clause triggered, and yet the share price continues to go up. And so, at the time it was 60 cents, now we're at 80 cents. And I think what we're seeing is a fundamental shift in investor mentality in the junior market, where retail investors are becoming more savvy and understanding that, just because you have good drill results, there's no monetization event other than an M&A transaction. So, and there could be continued dilution, every drill program. So what we're hearing from investors, and why investors are kind of piling into the company, is that we're a mining company or junior that is kind of morphing from, having that perception of being a junior where you continue to have to raise capital to utilizing our capital from our revenues, which we've done. And we did that with Dominion, and we've done that, we did $1 million investment into Blue Lagoon. That was all based off of cash flow. It wasn't money that we raised to do it. It was our cash flow allowed us to do it. So, and the investors are catching on. The investors are getting a lot more savvy when it comes to which companies they choose, and and I think we're one of those companies because they can see the very near-term cash flow and the acceleration of future cash flow.
Well, speaking of people following Nicola, Atrium Research recently increased their target price to $1.10, up from 90 cents, and have maintained their buy rating. This analyst upgrade comes during a strong precious metals market, though. How dependent is your business model on commodity prices versus the processing fees and the margins that you're generating at Nicola?
Rachel, that's a great question. And so as you know, my background is distressed debt. And so Nicola has built itself on a base case, low case, bottom case, worst case scenario. And so, I like to think that we're, obviously when metal prices go up, there will be an effect on our share price. But the real platform of the genesis of who we are is what happens if metal prices go down and it makes, and the markets dry up to raise capital. Nicola will be there because we will be generating cash flow from our operations that kind of makes us immune to those fluctuations in the precious metal prices that other people rely on to go out and raise capital. So yeah, there's a lot of capital that's entered into the junior space again, especially focused on precious and base metals. But again, we're there for that, but we're also that safety cushion of the base case scenario or the worst case scenario where that cash flow will allow us to mitigate future dilution. So that's kind of and Atrium sees that, right? So Atrium sees that. I believe that the investors that are coming in investing into Nicola right now, they see that as well.
For folks who want to follow the Nicola story, what sorts of performance indicators should we be looking out for in the next few months?
Yeah, so the next few months is really let's call I guess the rewards of the hard work that we've put into making the foundation for Nicola Mining. And so this has been years in the making, and we can control what we do, but certain entities, it takes time to get permits, and so all the permits are there now. So I think what investors can really look forward to and will see you know towards the end of Q3, Q4, and next year certainly as well, is the execution of what we said that we would do. And I like the Japanese saying, the wise eagle hides its claws. So Nicola's never, we're not people who project where we're going to be in 2 years from now or a year from now, and with these um very, very large aspirations. So over the next, the rest of this year, the market will see what we said we would do, what we have, and it will see the execution and the rewards coming in. That being drill results, cash flow, additional opportunities. So that's something that investors can really look forward to.
Well, I, for one, will be watching. Thank you so much, Peter, for being here.
Thank you for having me.
That's Peter Espig, CEO of Nicola Mining, NIM on the Venture Exchange. You can also go to CEO.CA to learn a lot more about what other investors are saying. Thanks for watching.